All right, welcome back to another episode of the Black Bullion Show for goldandsilvertoday.com. Check that website out, everybody. So, the International Monetary Fund, also known as the IMF, just came out and raised its global growth forecast by stating that they see the global economy contracting by just 4.4% as opposed to a deeper 5.2%. They also provided more information about prospects of economic growth for the future. Now, I'll give my take on how that could actually impact gold and silver prices shortly. But first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. Helps to get this economic evangelism right on out there to the masses to bring more people into precious metals. Okay, so here's the article from Kitco entitled IMF Raises Growth Forecasts for 2020 in Latest Global Economic Report. All right, so I'll just read this brief blurb here. Looking at the impact of the ongoing issue, the IMF said that social distancing due to the issue will continue into 2021. The report added that local transmissions will fall everywhere by the end of 2022. The United States economy is set to fall by 4.3% this year, much better than the 8% contraction predicted in June. Meanwhile, the Eurozone's economy is expected to contract by 8.3% in 2020, an improvement from a 10.2% contraction forecasted in June. Commodity analysts appear to be mixed on what impact the economic revisions will have on gold prices. Some analysts have noted the upward economic revisions will lower gold's appeal as a safe haven asset. However, other analysts have said that gold will continue to do well as the Federal Reserve is not expected to raise interest rates anytime soon, even as the US and global economies improve. The analysts note that this scenario would see inflation pressures rise and reduce real interest rates, a positive environment for gold. So let's talk about that. Would this actually be a plus for gold? Well, I would say yes, unless some funny business actually happens, which I'll go over shortly. Now, here we have the 10-2 year yield curve. When there are expectations of a recovery coming in the future, that also gives rise to inflation expectations. How that is reflected in this graph is by seeing it steepen by shooting up, as you can see here, in 2008. Okay, so, in 2008, the bond market expected a recovery to come in the future. So as inflation and inflation expectations rose, so too did the price of gold and silver. Now, the reason why it stopped was because of a sleight of hand that the Fed performed known as yield curve control. What they did was they targeted a longer term rate, promised to buy a bunch of long-term bonds so that it would keep the curve depressed. And that's exactly what happened as the curve began to trend downward. So with that being said, that will be a threat towards the end of our current gold and silver bull market. Just know that I will be monitoring that, on this channel so that you guys are all aware of when that could possibly happen. Now, remember, the Fed has gone on record in saying that they will allow inflation to rise above their 2% target to average out the lower inflation that we've been experiencing recently. Once they start changing their tune, that's when I'll start providing information about a threat to gold and silver prices and if they're in an uptrend. But guys, let me know what you think about all of this in the comment section below. Thanks again for watching. Please hit the like button. Please subscribe if you're new. It's Black Bullion for goldandsilvertoday.com.